Welcome back to the Wall Street Podcast. For this deep dive, we are getting into the latest analysis and reports from the Wall Street Journal, published September 26, 2025.
And it's certainly a complicated landscape for investors just now. What we're really looking at is this convergence. A lot of corporate regulatory risk, some very mixed macroeconomic signals, and then these political showdowns heating up, things you need to watch closely.
Okay, let's unpack that. Starting maybe with corporate accountability, the big news has to be the Amazon settlement with the FTC.
Oh, absolutely. A huge figure, $2.5 billion total. That breaks down into a $1 billion civil penalty and $1.5 billion set aside for consumers.
And the core allegation was about Prime subscriptions, making it hard to cancel.
Exactly. The FTC called them dark patterns, basically duping users into signing up and then, well, making cancellations incredibly difficult. Prior to their updates, it took navigating something like 4 pages, 15 options.
Wow.
The takeaway here for you isn't just the fine amount, though. It sets a precedent. That kind of engineered friction in digital subscriptions, it's now clearly a major liability risk, not just for Amazon, for really any online business.
And that regulatory focus, it isn't just on retail, is it? We're seeing moves in the crypto space, too.
We are, specifically around companies adopting what they call crypto treasury strategies. The SEC and Evora have contacted over 200 firms about
And
this.
what's the concern, the crypto itself?
Not directly, no. It seems to be more about disclosure. They're looking at unusual trading patterns, stock price jumps before these crypto strategies were announced publicly. They're specifically citing potential violations of Regulation FD.
Regulation fair disclosure.
So the worry is selective leaking of market-moving information before it hits the wider market.
Precisely. Okay, now let's pivot to the economy because the signals are, frankly, confusing. On one hand, the final Q2 GDP estimate got revised up quite a bit to 3.8%. That's actually the strongest quarterly growth we've seen in nearly 2 years.
But there's always a but, isn't there? Well, yes. Look at the auto industry. It seems to be flashing some serious warning signs.
You mean CarMax? Their stock took a huge hit.
A 20% drop. Sales and profits plunged. It points to consumers really pulling back, feeling the pinch from high interest rates and just, high car prices generally.
So the economy is accelerating and stalling at the same time. It's a strange picture.
It is. Which brings us neatly to policy volatility. Let's talk tariffs first. President Trump's new tariffs.
Right. These are pretty targeted. What's being hit?
Pharmaceuticals face a potential 100% tariff. That's if companies aren't building manufacturing plants here in the U.S. And heavy trucks get hit with 25%, both starting October 1st.
And the economic impact. What are economists saying?
There's concern, naturally. Gregory Dacko at EY Parthenon, for instance, highlights the tariff uncertainty itself. He sees it as a growing headwind against spending and growth.
So it's not just about potentially higher prices down the line.
Well, that too, but Dacko's point is also about capital allocation. This kind of uncertainty could, divert investment away from perhaps more productive areas like AI and force it into industries that are now being protected, maybe less efficient ones.
Interesting trade-off. Okay, another big political risk factor. The Supreme Court and the Fed. What's happening there?
The court agreed to hear a case challenging the president's authority to remove a Fed governor, specifically Lisa Cook.
And the core legal question is?
It all hinges on the interpretation of for-cause removal protection. That standard was set back in the 1935 banking reforms. The outcome here could be massive. It really determines if the Fed stays insulated from direct political pressure or if it becomes essentially answerable to the president's agenda. Huge implications for monetary policy independence.
Definitely one to watch. And finally, the threat everyone's talking about. A potential federal shutdown. What makes this one different?
Well, the political sticking point is Democrats pushing for about $450 billion in boosted ACA subsidies and also reversing some Medicaid cuts. That's the surface issue.
But you said different.
Right. The real escalation seems to be happening behind the scenes. OMB Director Russ Vought apparently sent out a memo, and it outlines preparations not just for furloughs, the usual temporary leave for non-essential workers, but for actual widespread firings.
Firings, not furloughs. That dramatically ups the ante. Permanent job loss is a much bigger economic shock.
Exactly. It makes the political risk surrounding this negotiation incredibly high.
Okay, before we wrap up, let's connect some of this back to everyday costs. You mentioned utility prices.
Yes, rising electricity costs are really drawing political heat now. Prices are up, 31% over the last 4 years.
And part of that is AI data centers needing more power.
That's part of the story, yes, along with grid modernization investments. But the point is, consumers are feeling it, and politicians are noticing. State regulators, for example, in Indiana and New York, are under pressure now to look at, maybe even cap, the return on equity utilities have traditionally been allowed. That's usually around 10%.
So investors in typically safe utilities might suddenly be facing more political risk because of rising household bills.
That's the dynamic,
Yeah.
yes. Consumer frustration is translating into a potential regulatory pressure on investor returns.
All right. So putting it all together, we have these huge political moves, the Fed's independence potentially on the line, a shutdown threat involving actual firings, aggressive new tariffs.
Mhm.
How should you, as an investor, even begin to price in this level of policy volatility, especially when the underlying economic data is still sending such mixed signals?
That's the critical question, isn't it?
Indeed. Something to seriously consider this week.